Hi everyone, hope you're all doing well. Today we're going to talk about a UK stock that I own that's been on absolute fire this week, and we're going to do a bit of an update with what's going on with that one. But in general, the UK stock market has been absolutely amazing this week. It's been on a very good run, and topped with if we have some good inflation data that comes out next week. We might be on our way to have our first interest rate cut before the US, which would be absolutely amazing. And Chinese stocks as well. Even Chinese stocks are getting a little bit of love this week. If you look at some of them stocks, I mean Alibaba, PDD, JD.com, some of them are absolutely flying this week anyway. So yeah, thought I'd talk about this one. And if you own any UK stocks in general or Chinese stocks, I'm sure you've had a pretty good week this week, but we'll do a full update on this one anyway. Hope you enjoyed the video. Let's get started. Now, just a quick little shout out. If you do want to see some more exclusive content from me this weekend, join the Patreon. Link is in the description, £5 a month. You can see here, I just posted my US stock market portfolio review for May. So you get to see how all my positions are doing in that portfolio. And as well as that, I'll give you another exclusive video this week and a Discord with 500 members on to talk about stocks, including me on there. £5 a month, guys. The price of a pint. You help support the channel. Your choice anyway. Let's get on to the stock. So watch the Switzerland Group. What a week this one's had. Up 18% in the last 5 days. It's a relatively new position into my portfolio, and this is my newest turnaround play into the portfolio. So this is a stock that I have seen struggle financially. The share price has struggled financially, and I've looked at it now and I saw the stock getting really beaten up, and I thought, you know what, I think there's a decent company in here, and there's just it's struggled, but I think that they are near the bottom now. The financials are going to turn around, and I look at the share price and I feel like the market's just gone, we've sold you off a bit too much here. That's what I feel like the market's doing. So I did start buying up some shares in Watch of Switzerland quite recently, and just to show you in context about how much the company has struggled in the last few years, you can see the stock peaked massively at £14.70 a share. But since that time frame in 2021, the stock was all the way down around about 77%, apart from the recent jump that it's just had in the last few days. And that actually puts it before that time frame, before that actual recent jump. You would actually have got this lower than where it was before January 2020, the whole COVID situation. And I think you would have actually got it pretty much at its IPO levels back in May 2019, which is puts it into context how low that share price actually got. It's now at 9 times earnings, so it's not too bad when you look at the current earnings basis here. But I did make a video around about a month ago, as you can see here. I bought a new turnaround stock, Watch of Switzerland. I made that video around about a month ago here. Now, the store itself, I'm sure you've seen them on the high street. They've got these Watches of Switzerland stores. They've got them in the UK, they've got them in Europe, they've got them in the US, which is a big area they're focusing on growth at the moment. But they've also got some other brands as well, like Goldsmiths, for example. Now, the big thing that's affected them, in my opinion, is that what we had is a big surge in 2021. We had everyone, because of the COVID situation, everyone has had so much free cash. And there was a lot of people that were buying watches or higher end watches that wouldn't normally buy them because they had all this free capital. And maybe the people that normally buy them as well, they were buying a lot more than what they normally do because they had free capital. Everyone had a lot of free money, and that led the big drive up in people buying luxury watches. And I think that's quite evident when you look at the financials, when you look at the share price. But then what happened in 2021, 2022, we started to see that kind of big free money out there that everyone had from COVID. Everyone kind of spent it, and also we had basically inflation starting creeping up during this time frame, and we had people just cutting back on spending. People that bought watches didn't really need to get a watch in 2022 because they bought in 2021. The wallets were getting tighter. We had all the kind of worry around the stock market going down. We had all the inflation issues, oil pressure, because oil prices were going crazy because of Ukraine and the Russia situation. And the energy crisis, and I think we just had basically a reality check on luxury watches, and that caused a big sell-off. And we can see what I believe is now a U-shape getting created in here, and I feel like we have got to the right price where we should be, and we will start hopefully leveling out a little bit here and maybe even go up, because I mean, over time the big thing is that watches hold the value when they do go up in value, and I think we will get to that at some point. It's just, when do we get there? And for me, I felt like this was potentially the opportunity to take right now. I think the worst of it is kind of behind us now, and when you look at what the stock is priced at, I felt like this was the opportunity to jump in. Now, the last update they had was very weak. That's what caused me to get the stock quite cheap, was on this last update. You can see here the stock fell nearly 30-40% on the last update. So there was a little bit of element and risk here that I was like, can it get any worse from here? So I kind of bought a starter position in it and wait for the next kind of update. And that's the update that we got this week. But obviously, as you can tell with the share price reaction, the market really liked it. And in fact, I really liked it as well. This was a lot better than even I thought it was going to be. I was expecting things to just kind of, I was expecting of Watches of Switzerland to kind of go, yeah, things are about the same as in the last update, but they're not getting any worse. That's what I was expecting. But in this update, they actually came out and said, things are actually starting to improve a little bit, which was like, oh, I wasn't expecting you to improve just yet, which is good to see. We finished the year strongly, they definitely did, with Q4 sales in line with guidance and ahead of consensus. Particularly pleasing was the performance in the US with sales up 14%. That's really good, 14% growth. Now this is important, the US is important because Watches of Switzerland have historically been quite a UK-based company, but the big growth driver now is to expand into the US. And the fact that their US is, I'll show you in a little bit, but the US is actually getting a bigger part of the business as the UK and is growing faster than the UK and is actually growing 14%. This is ticking every box that we wanted to see. Now, they actually launched the Rolex certificated pre-owned as well, which they actually said later on that was actually performing somewhere down. Yeah, so performing ahead of expectations, which is really good to see. They're adding in something new and that's performing ahead of expectations. You can see here they've still got the long range plan of targets of more than doubling sales and adjusted EBITDA by the end of the year, financial year 28. I'll tell you something, if they do get anywhere close to them sort of targets, or if they do hit them targets, I'll tell you something, guys, this is one of the reasons why I bought the stock, when it was a £3 stock, is I went, if they get anywhere close to them numbers, this stock is not down at a £3 range or even a £4 range. Saying that, it's not going to be down here at these sort of prices. So that was the thing that I thought, you know what, if you can achieve that, they've hit the previous targets they've always set out. I thought, you know what, that was one of the reasons that I did buy. Revenue growth of 4% versus Q4 financial year 23, constant currency of 3%. That's really good considering the impacts that they do have at the moment. Luxury watches revenue at 5%. So we can see here once again evidence that the luxury watch market is kind of coming back here a little bit at the moment. Once we talked about this already being ahead of expectations. They saw a significant improvement in jewellery performance. So this is something that we really wanted to see because this was the really big weak part. If you remember when I did the last video, which was on here, I said the big weak part of this business was the jewellery part at the moment, and that did start coming back good, which we want to see. You can see the US growth that we saw here. They launched another. There was a lot of talk about new launches that they did do, but they launched a new store in New York, but there was a few other ones in here, but I thought that was another one of really good significance. Sales trends in the UK was down 4%, so you can see here the UK and Europe is still dragging down on the business. However, it was a lot better than where they were in the Q3 update, so that was good to see, some improvement. One of the negatives that I did see was that e-commerce revenue was down 20%. However, obviously the big thing is the stores. That's obviously the main thing. You tend, when you're buying luxury watches, you tend to want to look at it in person, don't you? They set out the financial year 25 targets, which was a growth of 9 to 12%, which I thought was okay. Adjusted EBITDA margin, a little bit of improvement of 0.2 to 0.6%. I'm fine with that one as well. And just to show you the growth now of the US, there you go. So US is now level peggings with the UK and Europe. So the big thing is that this UK and Europe is struggling a little bit more at the moment. You can see a negative 4% growth. And this is, the US is still doing absolutely amazing. And that's with what you thought was quite a weak environment out there. So the more that the US gets bigger than the UK and Europe and grows faster, that's really good news for us. So yeah, I'm really happy with that. Now, what's this advert down at the bottom? So, another thing that they did is they actually made an acquisition last few weeks. I've not really talked about it on the YouTube channel, but I will do now. So they actually made an acquisition. They made an acquisition of Roberto coin, and they made that for $130 million, which I thought was a really good price. We'll look at them in a second. But they did this on the 8th of May. Now, if we have a look down here, I've highlighted, so the acquisition completed of $130 million of cash, which $10 million is deferred for 1 year on future profitability. I thought that was really good, so they don't have to potentially pay up as much if the profitability doesn't hit. The acquisition was financed with $115 million term loan facility. So they did take on a bit of debt for this, which we'll point out, which I think I'm okay with, because when we look at the numbers in a second, you'll see them here. So like I said, that debt that they took on is about a year's profitability of Watches of Switzerland. So that's not too bad. Obviously, the debt on the balance sheet here will creep up. So we're around about 13% debt to equity. So we will shoot up to about 168 million in debt. So we are probably going to be more towards 35% debt to equity, which is still not too bad. As well as that, obviously, you know, they're still going to sit on a lot of cash here as well, because like a lot of it is, like we said, a lot of it has been financed. But like I said, it don't really bother me, because this debt that they took on, they're basically going to make it in profit a year. And this is the big thing, is like, people talk about when stocks are making so much money, what do they do with it? Do they go do a dividend, which obviously Watch the Switzerland don't do? Do they do a buyback? Yeah, buyback would be nice, but what would be even better is this, you know, once a buyback's done, it's done at the end of the day. If you can acquire a company and you make it work, that's even better, because that is generation of profit and revenue for multiple years. So if you can, you know, dividends get a lot of attention and buybacks get a lot of attention, but if you can make an acquisition and make it work, that's really good for the business. Now, if you actually look at this acquisition that they have just made, which is obviously a jewelry brand, which is Roberta Coin, you can see here that the company achieved 146 million in revenue, which obviously is in dollars. Now, if you look here, 130 million is what they paid for it. So they pretty much paid, you know, one-time sales for this business. That's really good. In fact, less than one-time sales. That's really good price for a business. Now, even if you look at a profitability point of view, the company throws off profit before taxation of 30.1 million. That is fantastic. Obviously, that's before taxation, but 30 million, and you only go pay. And some of it is on, obviously, the profitability side of it, if they ever make a certain amount of profitability. But 130 million, that's a steal, guys. That's a really big steal. This is a really, really good acquisition here that I didn't think got the recognition when it came out on the 8th of May. This is really good. So you imagine that profitability. You know, I think when you look at this guidance here, and they're only showing this, you know, this guidance that they gave earlier on down here, I was like, I don't know if this is a little bit sandbagged, because this acquisition alone surely is going to enhance the profitability a lot, and also the revenue a lot. So I don't know about that one anyway. So I thought they're just being a little bit cautious there on the guidance. But actually, I think at the start of this here, yeah, they did say reflects cautious optimism around here. So yeah, overall though, I thought that the update was a lot better than what we were expecting. A lot of the financial, especially the US growth, was massively moving in the right direction, and even UK and Europe recovered as well. But as well as that, another really good thing is that I think they're really using this profit they throw off and the balance sheet they do have to buy in, you know, this acquisition here. I think they've got this for a really, really good price. So I've only got bullish, even more bullish on Watch of the Switzerland after a really good trading update that was ahead of my expectations, and in my opinion, a really good acquisition for this business. Because you think about the Watch of the Switzerland, you know, they're primed to put this in all the really good locations that they own, and they're probably going to make even, you know, rather than selling someone else's product, you know, they're going to own this product. So imagine that, like the profitability they're going to make off selling this as well. It's a lot more than when you're selling a third party's product. You own this, so the profit they're going to make off this is going to be obviously, you know, really good as well. So this is a really good acquisition. So I looked at the trading update, and I looked at this acquisition they made in the last few days, and the actual day where we actually saw this pop off, I'm not going to lie, some of it was me buying on that day. I bought some shares on that day, as you guys on the Patreon know. I obviously bought my original stake in Watch of Switzerland, but this trading update and this acquisition just gave me more confidence of, like, yeah, this is really a turnaround play that I think I've got pretty close to the bottom here. So I thought, you know what, I'm going to add some more shares in here. So really, really happy with this one, and I'm sure if any of you guys own the shares in this one as well, you're pretty happy with this one so far. So hopefully we'll see some more strong trading updates come out of these guys, but I'm happy with what's going on here at the moment. Hope you enjoyed the video, guys. Have a great weekend. I'll see you probably in a couple more days, and I'm going to talk about another stock that isn't doing so well. I'm sure you know which one that one is. Hope you enjoyed the video, guys. See you in a bit.